Hey traders, I hope everybody had a good week. I had a pretty busy week with work, but was able to get in some trades. I didn't realize I put on this many trades actually until I was completing the spreadsheet. Just for you guys' information, before doing my videos and sending out my trade alerts, I never really captured or logged my trades like you guys see here. I'm really just doing this for you guys to have a good snapshot of the trades that I took for the week and also to be able to provide some education about the trades as well. But if I was just doing this on my own and didn't have anybody looking over my shoulder, I wouldn't even bother putting this into Excel like you guys see here. My focus was always on my year-to-date performance, so that's the number I would keep an eye on in my brokerage app because I had certain targets that I was trying to reach for the year, but I never looked at it in this level of detail from a week-to-week basis. So don't feel like you have to put together some kind of complicated spreadsheet like you see here. I even feel like mine is a little overkill, especially I've added some additional columns we'll talk about later. So, it's fine if you want to keep track of your trades in a spreadsheet, but don't feel like you have to get overly complicated. And like I was saying, maybe my spreadsheet is a little overkill here. And if you guys think this is too much information or confusing, let me know and I'll try to make it more simplified and maybe don't show all this information. But I'll talk through the additional columns that I had here. And again, it's more for educational purposes, those two columns, than it is really needing to have that information as far as the trade's concerned. All right, so anyway, let's jump in. First trade I have, this is the trade that I put on last week on 8/13. It was an ATVI. I'd sold the 121 strike for this week's expiration. It was a put, and I received a $1.07 credit. I closed it for 33 cents. It gave me a profit of 74 cents. I only did 5 contracts, so that was a total profit of $370. I closed it on 8/17, so it was only a 2-day hold. SLV, that was a trade I opened on Monday. I sold the 25 put expiring this week and got a 56-cent credit. I ended up rolling that trade today. I rolled it to the same strike price and got a 62-cent credit. I actually could have closed this out today for a profit, but I was going to put the trade on again anyway for next week, so I decided to go ahead and roll it, keep it at the same strike to get a good credit. I could have rolled that down to the 24 strike probably and still gotten a credit, but again, I wanted to get the bigger credit, thinking that SLV could be back above 25 next week. Okay, so let's look at these two columns as it pertains to SLV. So what I'm trying to show you here is what would my loss have been if I did not roll this trade, right? So on 8/21 today, if I did not roll SLV, what would my loss have been if I would have just closed it out and moved on? Well, in this case, it would have been a profit because like I mentioned, I could have closed this out for a profit. I could have closed this out for a profit of $280 today, but instead decided to roll it. Okay, and what this column is showing is what would my loss be if I closed it right now. So this column was at the time of the roll. This is based off the closing price of the option for today. So actually, if I would have closed this out toward the end of the day today, I actually could have made $320 versus the $280 when I rolled it. Last week in my spreadsheet, I just had the one column called unrealized loss. And I had a couple people push back on me using the term unrealized loss just because when you roll a trade, there is a realized loss when you close out the one trade, and then you have an unrealized loss when you get into the other trade. So just to make things hopefully less confusing, I just changed the titles of it and broke this out into these two different columns. I'll probably try to make a video this weekend explaining more about the realized, unrealized losses when you roll. And also, I'm still getting a lot of questions about why I'm not showing the cost to buy back the option when I roll. I'm just showing a bunch of credits. So I think people are thinking that I'm not accounting for the closing price to roll this. And I've mentioned this several times in these recap videos that I am accounting for that. It's included in this net credit. But when I make that video talking about unrealized and realized loss, I'll give some examples of what I'm talking about, and hopefully that will finally resolve this issue, and I can just point them to that video when they have questions about this topic. All right, next one we have is MU. So this was another one I opened on Monday, sold the 45 strike for this week. I got a 66-cent credit. MU started dropping shortly after I got in, so I ended up having to roll that today on 8/21. I kept it at the same strike price because I couldn't roll it down a strike price and still get a credit. So I rolled it to next week and got a 20-cent credit for that roll. I only did 8 contracts for this trade. So you can see for this one, so MU, if I would have closed this trade out today instead of rolling, I would have lost $1,224 at the time when I rolled it. Based on the closing price of the option that I'm in now, the one that I rolled to, I would lose $1,328 if I were to close that trade out now. So it actually dropped further in the day to where now I'm going to lose a little more money than if I'd have just closed it out earlier in the day when I rolled it. But again, I'm not going to realize this loss because I'm going to stick with the trade until MU recovers back above 45. The next trade I had on 8/18, I put a trade on in Tesla. I did the 2050 credit spread for this week. I got a credit of $9.05. I closed it for 3.8. Total profit of 5.25. I did one contract, and that was $525 in one day. On 8/19, these are two trades I did not send in my alerts just because they happened fairly quickly, and by the time I would have typed up the email and sent it out, it would have been over with, so I did not send these out, but I'm still capturing them here because these were actual trades that I took, and I'll show in my brokerage account as well the fills that I had. So you can see the first one was just a 48-minute hold. I sold the 34.05, 34.10 call credit spread in XPX. This was a 0 DTE trade. Sorry, I have the expiration as 8/21. Actually, it was the 8/19 expiration because it was the Wednesday expiration for XPX. Okay, so I sold it for $1. I bought it back for 40 cents. Total profit of 60 cents, and that was $600 for me because I did 10 contracts. And then shortly thereafter, I got back into it again. This time I sold the 3400, 3405 call credit spread. I got a credit of $1.25 and closed it 29 minutes later for 25 cents, which gave me a total profit of $1,000. PINS, on 8/19, I sold the 35 put. I got a 52-cent credit. I had to roll it today, and I was able to roll it down to the 34 strike to next week and got another credit of 6 cents. Again, that's a net credit. So you can see that when I rolled this trade today, I could have closed it, but I would have lost $410 by closing it out when I rolled it. And then if I were to close it out now, based on the closing price of that option, I would lose $310. Next we have on 8/20, I put on a Tesla trade, the 2050, 2100 call credit spread. I got a credit of $7.27. I closed it out this morning for 16 because Tesla had a nice pop this morning. So I took a loss of $873 for that trade. Shortly thereafter, I decided to get into an Amazon trade to recoup the losses that I had in Tesla. So I sold the 3260, 3250 put credit spread for expiration today, so a 0 DTE trade. I was in it for about 5 hours. I received a credit of $224, closed it for 20 cents, gave me an overall profit of $1,020. I did 5 contracts on that one. Then I decided to get back into Tesla again since it kept going up. So I sold the 2110, 2115 call credit spread. I was in it for about 3 hours. I got a credit of 1.02. Closed it for 0.39, and that gave me an overall profit of $630. Actually, for my original Tesla trade, if I would have held on to it closer to the end of the day, I probably could have gotten out of this with a profit because it closed right at 2050. But again, this morning when it was up, I decided to close it and just take the loss. I didn't want to risk getting max loss because my max loss was around $4,300, so I'd rather take an $873 loss than lose over $4,000 on that. But again, when I went into this trade, I was willing to take the max loss if it came down to it. And that brings up another point. I've said this before, but you guys should not take the trade if you aren't comfortable taking that max loss. I mean, the reason why I was comfortable taking that loss because I knew all the credits that I was receiving for my other trades. For example, the SPX trade, that was $1,600 right there that I made the day before. So I was totally fine if I had to lose some on that Tesla trade, realizing it was a riskier trade because of the way Tesla moves. I was fine with that because I knew I'd had these profits. So you just have to take that in consideration. When I'm setting up my trades, I'm factoring in all the trades that I have on, plus all the trades that I've profited off of for the last several weeks and months. I'm factoring all that in when I'm deciding to take a risk like this Tesla trade. You just need to evaluate these trades yourself and determine if that risk is something you're willing to take. Because I got some emails this morning kind of in panic mode from people saying, what do I do? You guys have to keep in mind, I work a full-time job. I don't always have time to respond to an email that has urgent in the subject. I mean, luckily today I had the time to respond to some people, but sometimes if I'm slammed with work and have meetings back to back to back, I may not even check my email until the end of the day. So you should not enter these trades if you don't already know how to handle worst case scenarios, right? You should know how to handle situations where the strikes are out of the money, if they're in the money, if one strike is in the money and one strike is out of the money. You should understand all the scenarios of what could happen when you put on trades like this, so you're not having to rely on me to tell you how to handle it, because again, I may not be able to respond to your email in a timely fashion, and you would need to have an answer, before the market closed. So anyway, just be careful with these trades. Make sure you know what you're doing before you put these on, because especially when it comes to spreads, and especially the way that I trade them with some of these, 1-day 0 DTE holds, I'm going into it realizing that I may have to take a max loss, and I'm okay with that. Okay, so for ATVI, that was a trade I put on at 8.6. I had to roll it on 8.14 to this week's expiration. I was able to close it out this week. I originally got a 64-cent credit, then I rolled it and got a 5-cent credit. Today I closed it for 1 cent, so that gave me a total credit of 68 cents between the initial credit and the roll. My total profit was $544. And so you can see that if I would have closed this trade out on 8.14 when I rolled this trade, if I would have just closed it out, I would have lost $928. But by rolling it and waiting for the stock to recover, I didn't take that loss. I actually ended up with a profit of $544. Chewy, that was a trade I put on 8.6. I sold the 54 strike put and got a 63-cent credit. I had to roll it on 8.11 to this week expiration. I rolled it down to the 53 strike, got a 1 cent credit for that roll. So I was able to close it out today for an 11-day hold. Overall profit is 63 cents. That was $630. And look at this one. If I would have closed Chewy on 8.11 when I rolled it, if I'd have just closed it and said, you know what, I don't want to roll it, I'm just going to take my loss and move on, I would have lost $1,950 by closing it out then. Because at the time, Chewy had dropped a few points below my strike price of 54. But I went ahead and rolled it, and Chewy eventually recovered. Now I have a $630 profit as opposed to taking a $1,900 loss. AMD was a trade I opened on 8.10. I had to roll it the next day because AMD dropped. I got a $1.09 credit for the initial credit, and then when I rolled it, I got a 19-cent credit, and I closed it on Monday of this week for 25 cents. Gave me an overall profit of $515. And again, I would have lost $555 on AMD if I would have closed it out on 8.11 instead of rolling it. Uber, this is one I've been rolling for a couple weeks. So Uber, I initially got in on 8.7 at the 31.50 strike. I got a 53-cent credit for that. And then I rolled it on 8.13 down to the 31 strike and got a 7-cent credit for that one. And then I rolled again this week on 8.18. I was able to get it down to the 30.5 strike and got a 1 cent credit for that. And so you can see I would have lost $620 if I'd have closed it out on my first roll on 8.13. If I'd have closed it out, I would have lost $620. And you can see on the 8.18 roll, I would have lost $690 if I were to close it out. Uber actually recovered back above my strike price of 30.5 this week. So you can see actually right now, even though I went ahead and rolled it, I could close this trade out now for a $30 profit. So basically a break even. So instead of taking that loss last week of $690, I could get out of this trade right now for a $30 profit. But I'm hoping that next week it'll stay above 30.5 and I'll get to realize all these credits as my profit, which is $610. Lastly, I've got my SPY put that I bought as a hedge. So I bought the 300 strike put out to October 16th. That was a debit of 4.23, so that's why I have the negative there. Did 7 contracts. If I were to close that out right now, I'd be at $875 loss. So I'm going to keep this trade on. It'll probably end up being a full loss, again, because it's a hedge. So as long as the market keeps going up, this put will keep losing value, and I'll probably end up losing all of it. But it is there just in case the market drops. I'll have this there as protection. So you can see for the week, it was a great week. I had a total profit of $4,961. I would have lost $2,000 of that if I didn't roll my trades. If I would have just closed out my trades, I would have lost $2,000, so that would have been reduced from my total profit this week if I'd have closed those out. And you can see right now, that's how much I would lose if I were to close out all my open trades right now. So if I closed out my SPY trade, if I closed out my Uber trade that's open, my Pinterest trade, my MU and SLV, those are the trades that are currently open. If I were to close all of those out, I would lose about $2,163 right now. But I will keep rolling them, except for the SPY trade, obviously. But the other trades, I will keep rolling them so that I do not have to realize this loss. And when I say realize the loss, I mean that my account will be deducted by this amount. Because right now my account includes this $2,000 because I haven't closed these trades out. Once I close these trades out, it will become a realized loss because that money will then be deducted out of my account balance. The SPX trade, I said I would show you the fills that I got since I wasn't able to send this out in the alerts. So you can see 11:56 a.m. is where I got my dollar credit for the spread. It was a total of 10 contracts. And you can see at 12:44 is when I closed the 10 contracts out. And I closed it out for 40 cents. So that was my 60-cent profit for that trade. And this is where I got back in at 1348. I sold 10 contracts again, but for the 3400, 3405, and that was a $1.25 credit. And then at 417 is when I closed it out for a 25-cent debit. So the last thing we'll look at is Tesla. I just want to show you guys. So this red line represents the 2050 strike that I had for that 2050 2100 call credit spread. So you can see this morning it shot up above that strike, and I waited for it to pull back because I was expecting it to pull back some. It was around 10 a.m. that I got out. So it was right when it got back close to my strike price is when I got out. And you can see there were several other opportunities throughout the day that you could have gotten out when it was around the 2050. And then of course it really shot up again. That's when I put on my second trade where I did the 2110, 2115 call credit spread. And it was getting close. I was worried it was going to hit 2100, but luckily it stayed below it. And once that big candle hit here is when I closed out that trade. And you can see if I would have held my original trade, the 2050 strike trade, till the end of the day, it closed right at the strike price. Unfortunately, my broker probably would not have allowed me to hold it that long. I think I've mentioned this before. Usually I'll get a phone call for them if I have a spread that's in the money because they don't want to risk the spread being in the money and then expiring and I get assigned Tesla shares at 2050 and I had 10 contracts. So that would mean I'd be short 1,000 shares of Tesla at 2050. So they would have probably called me around 2 p.m., 2:30 Eastern time and said, hey, Mark, we need you to get this trade closed out by 3 or 3:30 p.m. Eastern time before the market closes. So you can see 3 p.m. would have been right around this time frame. 3:30 is right when it started to drop. So I would have been forced to close this out pretty much at the high of Tesla for the day if I would have held on to this all along. And that would have sucked because eventually it dropped and I could have made my profit. So that's the one downside to doing spreads on these really expensive stocks is the broker is not going to allow you to hold it until the very last minute, or at least my broker does not, because I would not have the money if I was assigned that short leg. I even think brokers like Robinhood will automatically force close any position you have that's in the money with 1 hour left until market close. So anyway, I still would have gotten burned on this trade if I would have held till later in the day because I would have been forced to close it somewhere up in this area, up in the 2090 area. So that's all I got. Like I said, let me know if this spreadsheet is just too much. Am I just wasting my time going over a lot of this additional information? And would it just be simpler for me to just show you just kind of the profit for each trade? Or is it beneficial for you to understand what I'm trying to show here with the loss if I didn't roll and the loss if I close now? I'm really trying to paint a picture for you guys of why I'm rolling to try to eliminate taking the loss at the time I would roll it. And I know I'll get comments to make the argument that, well, if I would have closed these out and just went ahead and taken that $2,000 loss, I could have freed up my margin to get into other trades to recover that loss. So for example, this MU trade, maybe I could have just closed it out, taken a $1,200 loss, and that would have freed up enough margin for me to put on another trade. And maybe that other trade, I could have made $500 or $600 on that trade to help offset that loss. And that's possible, but there's no way to know, right? I could have closed this out and taken the loss. I could put on another trade and that trade could have dropped and then I would lose money on that one. I mean, there's no way for me to know. There's no way for me to know if there was a better opportunity for me to close this out and find a different trade. I mean, like my GEOS trade that I rolled for 2 months. In that instance, it was probably better for me to just close that out in the beginning and find other trades that I could have made enough money to recover that loss. I had no idea I was going to be rolling GEOS for 2 months. But GEOS could have also recovered the next week and I'd have been out of the trade and it wouldn't have been an issue. So I just don't know. I don't know if MU is going to recover back above 45 next week. I'm hoping it will, and then I'm out of this trade. And then it was worth it for me to roll and wait for it to recover and not take that loss and try to find a different trade. You can take whichever approach you like. Either you can just take the loss, move on, and find a better trade that you think can recover it, or in my case, I prefer sticking with the trade as long as I feel that the stock is going to recover. If I felt like the MU was going to keep dropping and then it could get down into the 30s where I would have a significant loss and it would be harder to roll, I would have just taken the loss and moved on. But I feel like MU will eventually recover back above 45. I don't know when that'll happen, but once it does, I won't have to worry about taking this loss that I would take right now if I were to close it out. All right, I hope everybody has a good weekend. Thanks.